Yeah, today we want to talk about two indicators that we are looking for when we do our fundamental analysis. And one of them is
Hello, everyone. What are some key components to understanding what you're investing in so you can make your money work for you? This is going to be the topic of this session. We're popping up here now unannounced, but we had to reschedule and we still want to deliver the value to you because when it comes to investing, it's all about balancing risk with reward. It's all about mastering low risk, high reward investments. And part of that is understanding what you invest in. That is gonna be key. And to get some more clarity and insights on this, I brought with me again, Manuela.
Hello.
Hi, awesome. And Manuela, you decided we should share two other factors. How do we evaluate stock investments? And first and foremost, for those of you listening, we do not provide advice, so do your own research. And we're going to talk about what's working for us, and we're happy to share that with you. But yeah, Manuela, you decided to we should share two other factors for evaluating stocks. So when we invest in companies, what are on the agenda today?
Yeah, today we want to talk about two indicators that we are looking for when we do our fundamental analysis. And one of them is the institutional ownership of a company.
So, what is this institutional ownership?
So it basically means if other companies, it shows us if other companies are invested in this company as well. So for example, some big players, so big companies that are trusting this company as well, and they invest. So but we don't want an institutional ownership that is too high. So we are looking for an ownership of 10 to 65%, not higher, because that if it's higher than 65%, there's the danger that when too many companies are invested there and they will pull out for some reason, other investors may get panic and sell as well, and this will lead that the price drops. So we don't want that.
That's the classical herd mentality. If you suddenly see a lot or the majority of people in a group do something, I experienced myself, even though just experience, let's imagine you're walking towards the train station or something, and then suddenly people around you start running towards the train station. They're like, are they knowing something that I don't know?
Yeah.
Should I run to catch the train as well, maybe? And that is the same effect, I believe, in this. Yeah. So as you mentioned, if there are many other big players, such as banks, get funds investing in a particular company, and suddenly many of them choose to pull out because they own the majority or a huge chunk of the shares, then do they know something I don't know? Should I pull out as well? Yeah. And that could be that domino effect going on.
But yeah, we do want some kind of institutional ownership because it shows us that there's trust in the company. So we don't want this institutional ownership of zero. So we want some kind of other companies invested because it indicates that there is trust.
Yeah. So if they're not companies, we would flip the question around. What do they know that I don't know? Maybe.
Yeah.
Or that I yet have to discover. Cool. Yeah, that is so important. It will give us, when other big players, banks, funds, big players that we call institutions, when they are invested, as you say, that will give us a lot of trust. True. What is the other factor that is worth mentioning that we will bring up today?
The earnings surprise.
Tell us more.
So basically, every company announces their profits annually or quarterly, and this the earnings surprise tells us if the announcement is above or below the analyst's expectations.
Mm-hmm. What happens if the company has made more profits than analyzed?
That's good.
Yeah, and usually we can then see that as a rise in the stock price.
Yeah.
So that would be a positive impact. And on the other hand, if the company hasn't earned that much profits, isn't reporting that much earnings, what happens then?
It may drop.
Yeah, that could be bad news. And in like in the moment, like for investing, it could be news triggering us to actually do some investing in a company there and then. If, like, for example, the price drops, because it might be that the other factors haven't really changed. Now, this is a key thing, because if the company keeps underperforming, not delivering the great results over and over again, yeah, that could be a bad sign.
Yeah.
Anything else we should mention regarding this?
I can't think of anything.
And it's a great factor. This earnings surprise tells us, yeah, how is the company delivering in terms of making its profits, and the other institutional ownership. So this is all about understanding the company when you invest in stocks and shares. And understanding these factors can have profound effect on your ability to make money in the stock investing opportunities, because we want to make sure that we invest in something solid.
Yes.
Great points, Manuela. Thanks for coming on, helping bringing clarity to this topic, because it's all about understanding what you are investing in. And we would love to hear what your biggest key takeaway are from this. So drop us a message or leave a comment. We would love to hear from you, so we also can support you in the best possible way. Well, let's do a catching move.
Yes.
Catching. Take care. Bye.
Bye.
Please be aware, we are no financial advisors. We do not provide any advice. We only share our experience, and our results are not typical. If we mention any stocks, funds and other type of investments, it is for educational and illustrational purposes only. Most people are unable to achieve similar results to ours. If you want to achieve similar results, you have to commit yourself to systemize, to learn and to stick to the rules.